The Kumo Breakout is one of the better trend following systems. This is my third Ichimoku video. In the first one, I promised to lay a strong foundation. Now we're gonna build on top of that. Previously, I went over a list of 6 things to check before entering a trade. We also went through 150 charts. If you don't feel comfortable when looking at the Ichimoku indicator, you'll want to click up here now, watch that first, and then come back. As a quick recap, before we set a valid long signal is when the cloud is green, faster moving average is above the slower, price is above both, and the lagging span is above that candle. For a short, it's the opposite. Red cloud, green average below the blue, price below both, and purple below the past candle. All of these are still true. And for the Kumo breakout, we're gonna add one more rule. Another word for the cloud is Kumo. So a bullish Kumo breakout happens on the first candle when price crosses and closes above the Kumo. In the same way, a bearish Kumo breakout happens when price crosses and closes below the Kumo. All other conditions have to be met on that candle or there's no trade. Let's go back to the charts. I'll show you what I mean. This would be a valid signal. Last candle closed inside the cloud. Now price crossed and closed up above the cloud. Cloud is green, green moving average is above the blue, price is above both moving averages, and the purple is above this candle. Same situation on the bearish side. This would be a valid trade. We just closed below the cloud. Future cloud is red, green moving average is below the blue, price is below both moving averages, and the purple is below this candle. Here's the first candle that closed above the cloud. Why is this not a long trade? Price is above the cloud, green is above the blue, price is above both, and purple's in the right place. But the first thing you should look at is on the right. And clearly it's red, so no trade. Right after this, we have a huge uptrend. Future cloud is now green. Let's look at the bottom and see if we could have gotten in. A few problems with this one. It is true price dipped below the cloud and then crossed back up. But look at the candle before it. We need the previous candle to close in or below the cloud. And here price was already above. You should also notice the green moving average is below the blue, which is against the rules. Not to mention price closed below the moving average, which isn't allowed. It would be nice to catch this trade, but be patient and let everything line up. Looking a few candles back, we see a nice move down. The white candle was above the cloud, and then this large red one closed below the cloud. Price is below the green moving average, which we also want to see. What's keeping us from taking this trade? The green faster average is above the slower blue. It needs to be below when going short. When I first learned about the Kumo breakout, every video showed a perfect setup like this one. Price barely crosses above and then it's off to the races with no sign of looking back. What happens to many traders is they think that kind of massive trade is the norm instead of the exception. But when they try it out for themselves, they feel like they've been misled and get disillusioned. To keep that from happening, I want to spend the next minute or two talking about the problems with the breakout. Then after, we'll see if the benefits outweigh the negatives. I recently backtested the Kumo breakout on all 7 major Forex pairs on the daily and the 4-hour time frame, as far back as TradingView would show me. I have a spreadsheet of 600 trades. Consider yourself lucky if you win half the time with the Kumo breakout. Expect the majority of your trades to be a combination of break even or losing. Losses happen with every kind of system, But I'd say even worse than a losing trade is missing out on a massively winning trade. Let's go back to the charts. I'll show you what I mean. Here we're on the daily chart for AUD US dollar. We see a massive move down of almost 4,000 pips, and then price turns right around and charges up for over 3,000 pips. In this case, the Kumo breakout would have let us down because we wouldn't have taken part in either move. Let's look at the downtrend first. Clearly the only place it crossed the Kumo was at the very top, so we either catch it here or not at all. Here the cloud hasn't quite rolled over to red yet. Replaying this trade, the cloud is green on the breakout. The next candle, the cloud is twisting. Only now is it officially red. Now let's take a look at what happened on the uptrend. Look at the values for both moving averages. Technically, we want the green to be more than the blue. In this case, they're the same. But I'm not a huge stickler when it comes to this, as long as the green isn't below the blue. The main problem here is the same as why we missed the downtrend. Moving 26 periods in the future, the cloud would have still been red at this point. Price never went back into the cloud and then back above, so we would have gotten left behind. We've seen where the Kumo is late in changing over, but oftentimes this is something that helps us. For every one time we miss a good trade, there will be 5 or 6 times where the system protects us and keeps you out of bad trades. We were still in a green cloud, so we were not taking the short. We would have been glad in this case. As soon as we took the short, price would have reversed and we would have lost money. Looking ahead a few candles, we may have a valid Kumo breakout. Price is above the cloud in both moving averages. Green is above the blue and purple is high enough. Once again, the future cloud hasn't changed yet, which would be a good thing in this case because price is clearly in a range and we'd be in more drawdown. Next breakout happens right here. Green is below the blue, price below both, purple is also low enough. The only thing left to check is the future cloud. 26 candles later, the cloud is still green and we're glad we did not take this trade. The next breakout happens here. Once again, the future cloud kept us from being stuck in a range. Assuming we get a valid signal where everything agrees, there's essentially a couple ways people trade the Kumo breakout. They either use a fixed profit target or they use a trailing stop. If you've seen my video on optimizing your stop loss, hopefully you remember 2 things. We never use a limit or a mental stop. We always use a market stop. Here we have a valid signal. Ichimoku offers different levels to set your stop loss. We can keep it just under the top of the cloud, at the green Tenkan-sen, blue Kijun-sen, or under the bottom of the cloud. In future videos, we'll get into deciding which is better. For now, let's just assume we put it under Kijun-sen here. The next decision we have to make is if we're gonna have a fixed profit target like 2-to-1 or trail our stop with a moving average. With a fixed target, we would have automatically exited on this candle. Price is still above both moving averages, so we'd still be in the trade in those cases. We can see price close below the green moving average and we would have exited for a slightly higher price. If instead we used the blue moving average, we'd still be in the trade. Price crossed but didn't close below the average, so we're still trailing our stop. Price closed below the average and this is where we would have exited. Here we easily hit our 2-to-1. It sounds good until we realize we missed out on an almost 10-to-1. I can show you trades where a trailing stop is better and then turn right around and show you where a fixed target makes more money. When it comes down to it, the only way to be reasonably sure is to test it over a large sample size. As far as the Kumo Breakout, I hope by now you're able to identify what a valid signal is. If you have any questions, let me know in the comments below. However, I think it's fair to assume you may be wondering about two things now. You might be thinking it's all well and good the Kumo Breakout gives signals. Lots of other trading systems give signals. How can I be confident that the Kumo signals are even profitable in the first place? Let's assume the Kumo system has potential. How do I squeeze as much profit out of it as possible? Is a fixed take profit or a trailing stop better in the long run? When it comes to trading, everyone has an opinion, but I try not to give advice unless I have evidence. And the best support are cold, hard numbers. It's easy to say this strategy worked on this particular pair over the last month. But for me to put my own money on the line, I need something stronger than that. As I mentioned before, I went as far back as TradingView would show me. Not just on one instrument, but all 7 of the major Forex pairs. I took every trade, about 600 in total, recorded everything in a spreadsheet. In the next video, I want to start unpacking my results, and then you can decide for yourself if the Kumo Breakout is worth investigating. Click the video here to learn more, and I'll see you in a minute.